Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen. I am a chartered professional accountant located in Oakville, Ontario, Canada. My mission is to become the Google map for hardworking Canadians who are seeking financial freedom. Today, we're going to talk about auto lease versus auto purchase. This is a very common topic that I get asked all the time by my clients who are using their vehicles either for employment purpose or to manage their rental portfolio purpose or even for their self-employed their own small business purpose. For these group of people, if they use their vehicle, they run their own vehicle for the purpose of earning income, a portion of the automobile expenses would be deductible. Before I get started, make sure that you subscribe to our YouTube channel to stay on top of the latest tax tips. Make sure that you also turn on the little notification button so then you get notified every time when a new video is released. Now let's get started. Should I buy a car or should I lease a car to maximize my tax deduction? So today we're going to go through a Honda Odyssey buy versus lease scenario. But before we get started, it's important to understand that every situation, every car is different. Every deal is different. And it's hard to generalize. And it's really important to run a scenario analysis based on the car that you purchase before you make your own decision. And some of the factors that may affect the situation could be the value of the car. How well does it hold its value at the end of the 4-year term? How well does it hold its value at the end of the 8-year term? How much is the lease payment interest rate? How much is the purchase finance cost? It all comes into effect, and also the maintenance cost as well of the car. Because if you buy an expensive car, European or US cars are more well known to have higher maintenance cost. If you buy these type of cars, does that mean that the maintenance cost, even though it is deductible, it may still be, it's not factored into my calculation in the following example. So these all factor into the situation, but today we're only going to talk about lease payment, pure deduction from a pure tax deduction perspective, lease payment versus purchase cost deduction. In front of you is the buy versus lease scenario under the 4-year horizon. Now, I'm using the data. I got these data information directly from Honda.ca, and I use the base model. I can't believe how much the base model has increased in price, because when I purchased my car, it was $38,000. Now it's asking for $43,605. So you can see that the purchase price under the lease option is $43,000, and so as the purchase price under the actual purchase price option, purchase option. So we're going to look at the monthly payment. $614 if you were to lease the vehicle, and that is equivalent to $7,400 roughly annual payment. Now, in my particular example, the taxpayer is using the vehicle to run his own business, and he uses it 90% of the time to run his own business. Now, the reason why it's so important to have that business use percentage is because only 90% of your payment would be tax deductible. Only the business use portion of the vehicle to run your business that allow you to run your business would be tax deductible. Now, if you look at under lease payment scenario, even though annual payment is about $7,400, $7,377, $7,400, the tax deduction every year is only $6,000 because only 90% of the annual payment is tax deductible. So you can see that every single year, the tax deduction, assuming that 90% is applicable for all 4 years, the amount of deduction could be less if you use a motor vehicle for the purpose of running your business. The percentage of your motor vehicle usage to run your business is less. So every single year let's say it's all 90%. So every single year you get a straight line deduction, $6,640. Now, you actually pay a total of $29,509 in the screen in front of you. And the tax write-off, if you pay about 40% tax, the tax write-off, it's about $10,000 tax saving. So the true net after tax cash flow is about $18,886. And at the end of the 4-year term, you may choose to buy out the car, or you may choose to lease a brand new car. And that's what happened to me. I chose to lease a brand new car when I got rid of my first Honda Odyssey. Now, so that's it. Like, under the lease option, you don't have anything else. You get rid of your car, assuming that you keep your kilometers under the contract requirement. You give back the dealership your car, and that's the end of the story. Your net cash outflow, net true cost, is about $19,000. Now, on the other hand, if you were to purchase a vehicle, you own it, and you don't have the $43,000 to front it the purchase price, so you decide to go for their finance program. Currently, the finance program on their website is charging about 4.19% interest cost. So the total interest cost for 8 years financing is about $6,782. The maximum, because you purchase your car, CRA only allows you to claim a maximum of $33,900, which is $30,000 plus $3,900 of HST in Ontario, as the maximum deduction in Ontario for any passenger vehicle that has a price tag over $30,000. So you could buy a Ferrari for over $100,000 or $200,000, but the maximum you can claim is $33,900 in Ontario. You can buy a Honda Odyssey for $43,605, but the maximum deduction again is only $33,900. So there is a maximum deduction. Now, the scenario is slightly different if you are buying an eligible environmental friendly electric car. So that is a discussion for another day, but today we're going to focus on a regular passenger vehicle. Now, if the taxpayer decide to purchase the vehicle instead and choose to finance the purchase, you still get the maximum deduction immediately. But the calculation and the way that is being deducted over time is very different. Basically, the calculation is based on the $33,900, the maximum deduction. And again, only 90% of the vehicle would be allowed for deduction because you only use 90% of the time to run your business. And so the first year, you get a bigger deduction because year one deduction is at 30% of the maximum deduction. So you take 30%, multiply by 33,900, and then multiply by the 90%. You would then get this number, 10,000. Now, this number also includes the interest cost because when you borrow money to purchase a vehicle, a portion of the interest cost would also be deductible provided that you use the vehicle for the purpose of running your business. So 90% of the interest cost would also be deductible. So year 1, year 2, year 3, you get deduction. As you can see, compared to the lease payment side, you get bigger deduction the year that you purchase it, and then the deduction gets smaller and smaller and smaller over time. Whereas on the lease payment side, you get a steady deduction every single year. Now, at the end of the 4th year, your total cash outflow by paying the monthly payment to pay off your auto loan, is about $28,000, $29,000. Now, but then your tax write-off, on the other hand, is about $14,000, $13,492. So your true net after-tax cash outflow is about $15,000. So as you can see under this particular scenario, under this type of interest cost and lease payment and residual buyback value, it turns out you're slightly more ahead if you were to own the car. Now, if you take an even more holistic approach to look at what happened at the end of the 4th year under the purchase scenario, if you were to purchase a Honda Odyssey and the value of Honda Odyssey in 4 years is roughly $25,000. I look it up, look up my car, and right now 2018, because today is 2021. If I were to look up a car that's in 2018 or 2017, that year of car is roughly worth on autotrader.ca, they're asking for $30,000. So I run it down to $25,000 to be fair, because I know resale cars value has gone up the roof because of COVID delay. Now, so the Honda Odyssey, let's say, is really worth $25,000 at the end of 4 years. My auto loan balance outstanding at the time is $22,000 at the end of the 4 year term. I could potentially just sell my car for $25,000 and then pay off my loan for $22,000. I am still ahead by roughly $3,000. So you are not only saving money by purchasing the vehicle under this particular scenario, you could even make money at the end of the 4 year term. Now, let's take an even more holistic approach and look at the situation over 8 years instead. What happened if I were to lease the vehicle for the same Honda Odyssey, one for 4 year, and then get a brand new vehicle for the second 4 year, and then the other one is to purchase and keep the vehicle for 8 years. And let's look at what happened. Now, it's the same scenario in front of you. The car is still the same price, $43,605. Under the lease vehicle situation, your monthly payment is roughly $615. You still pay the same $7,377 annual payment. Business usage assumption is still 90%. Year one deduction every single year is the same $6,640 from year one to year four. From year 5 to year 8, my assumption is that you want a brand new car every 4 years. So I assume, because I wouldn't know what happened 4 years from now, I assume that 4 years from now you can still get the same deal. You would still pay the same interest rate. So your new lease would be staying the same. So you just repeat the same as what you had paid in the first 4 years. So your new vehicle lease would still allow you to write off $6,640, assuming that the 90% business use is still applicable. So your total deduction is about $53,000 over 8 years by leasing, having two leases back to back. Now your total cash outflow is about $59,000. Remember, only 90% is tax deductible. The other 10% is not. So your total cash outflow is $59,000. And then your tax saving by writing off the 90% usage is about $21,000. So your net after tax cost, your true cost, is about $38,000 in front of you. Okay, if you were to look at purchasing a vehicle, assuming that you are the one who don't care about owning the same vehicle, driving the same Honda Odyssey for 8 years, and that's what your plan is. You're planning to own the Honda Odyssey for 8 years. And so you're not renewing and you're not getting a new car at the end of the 4 year. So let's look at this scenario. The purchase price is still the same. We talk about the interest cost in 8 years. It's going to cost you $6,700 to finance the purchase. Maximum deduction, again, is about $34,000. And as you can see, the first year you get a bigger deduction, $10,000, and it gradually goes down. And this deduction also includes the interest cost as well, because then you get to write off the interest cost on the finance of your purchase. And currently my finance cost is calculated based on the maximum term, and the maximum term allowed on Honda.ca is 7 years. So by the end of the 7 year, you no longer have the interest expense, and at the end of year 8, you get only the car write-off. As you can see, the car write-off is only dropped to $73 in year 8. Now, the total tax deduction over the year is about $33,729. Very close to the $33,900 that I mentioned earlier. So pretty much the whole car has been completely written off by the end of 8 years. Now you own the car. Total cash outflow in 8 years is $50,387 because you purchase the vehicle as well as finance it. So you also pay for the cost of the interest cost, the finance cost. The tax write-off is about 40% as well. And now the net after-tax cash outflow is about $37,000. Now, but then one thing that you also need to analyze is that it looks like at the end of 8 years, lease option, your net after-tax cash outflow is $38,000, but the purchase under the purchase option, your net after-tax cash outflow is roughly about 37,000. It's less than $1,000 difference. But it doesn't look like there is a lot of advantage if you look at leasing a vehicle versus buying a vehicle in an 8-year horizon. But the truth is, at the end of the 8-year, under the purchase option, you still own the Honda Odyssey. Now, I looked up 2013 Honda Odyssey on autotrader.ca, and right now they're asking for $25,000. I don't know how much they truly sell it for, but let's just assume that the Honda Odyssey, at the end of the 8 years, your Honda Odyssey, it's about $18,000. It's still worth $18,000. Now, if you take into account that you actually own your car now and you can resell it for approximately $18,000, which is substantial, your net after-tax cash outflow, if you were to resell the vehicle at that point, it's about $19,000. So if you look at $19,000 under the purchase option in comparison to the $38,000 under the lease option, you could see that you are a lot more ahead by purchasing the vehicle, in this particular case, the Honda Odyssey, for running your business. Now, the last option that I'm going to present to you is a little bit different. Under this option, you would then be able to maximize all your deduction tax write-off. Now, the implication could be slightly different as well. Tax implication could be slightly different. So under this particular situation, you want to maximize your tax deduction. And you know that if you were to purchase your car outright, all you can write off is $33,900. So one other option is to lease the vehicle first, so then you can write off the lease write-off, and then buy it back at the end of the lease, which would be, in our situation, $20,494. This is all from Honda.ca's website. And exercise the lease option to buy the vehicle for $20,494 at the end of 4th year, and then start writing off that $20,494. And under this particular option, you're still driving one car all through the years, and you are able to deduct $42,000, close to $42,000. As in comparison to purchasing the car, you would only be able to deduct $34,000. Now, total cash outflow under this particular situation is about $50,000, slightly less than the purchase option because the interest cost could be slightly different. Now, the tax write-off, however, tax saving is about $17,000, just under $17,000. So your true after-tax cash outflow is about $33,000. So you're still more ahead if you were to lease a car for 4 years and then purchase your vehicle. And then, so you would be more ahead in terms of cash flow wise. Now, but you also have to, similar to the other situation, I also have to step back and think about, hey, at the end of my 8 years, I still own my vehicle. And if I were to own that vehicle, purchase it, it's still worth $18,000. So the Honda Odyssey, I would be able to resell it for the same $18,000 as if I were just to purchase it all outright. And so under this lease plus purchase scenario, your net after-tax cash outflow, if you were to resell your old Honda Odyssey for $18,000, it's about $20,000. Because there is a recapture tax on the amount that when you resell the vehicle for a larger amount, and if the vehicle was purchased for less than $30,000, it goes into a different class in terms of tax deduction. So now you have recapture tax on sale of the car. And therefore, your true after-tax cash outflow is about $20,000, just under $20,000, as in comparison to under the purchase option, your true after-tax cash outflow, if you were to resell the vehicle after you resell it, is about $19,000. If you analyze the situation and under lease option, purchase option, or lease plus purchase option, it looks like lease plus purchase option is much better in terms of cash flow, saving net after-tax cost-wise for a Honda Odyssey. Now, Would this be different if you are reselling a different car that does not retain nearly as well in terms of value in 8 years? 100%. If you purchase a car that is going to be 10,000, it's only worth 5,000 at the end of 8 years, the calculation would be significantly different. And this is the reason why we would not be able to tell you, hey, is it better to lease over purchase or lease plus purchase right off the bat? And this is the reason why it's important to really go through the analysis and go through the calculation to make sure that you understand your options and your objective as well. Now that we have gone through the exercise of analyzing deep into this Honda.ca purchase versus lease option, I hope you get a better understanding in terms of the tax write-off. Lease is more straight line, steady write-off over the years, but purchase has bigger write-off, allow you to write it off a larger portion at the beginning of the year. And depending on the vehicle that you're purchasing, the maximum amount that you can write off is only $33,900 in Ontario. Now, we all have a better understanding now. If you have any questions, make sure that you leave the comment in the comment section below, so I will personally be able to get back to you. If you like the video, make sure that you give us a thumbs up and share it with people around you, small business owner, real estate investors as well. Until next time, happy Canadian real estate investing.